Were you aware that ARK Invest increased the price of Tesla's new stock to $20,000? Watch this space to learn the reasoning behind ARK Invest's actions as well as the supporting documentation for this assertion. Before making an investment, several investment firms meticulously evaluate the company's bonds or stocks. To make an informed choice, one must also take the stock market and economy into account. Analysts and investors closely monitor the developments and fluctuations of Tesla's stock. Despite the continuous fluctuations in Tesla stocks, investors are still eager to invest in the company because it's expected to grow even more from this point forward. Watch today's video to find out why ARK Invest increased the target price for Tesla's new shares to $20,000. Experts, analysts, and investors all agree that Tesla investors will become wealthy in the second quarter of 2022. This is predicated on the advancements and successes that Tesla achieved in the first quarter of this year. What are those? One would wonder, in the first quarter of 2022, Tesla had 310,048 vehicle deliveries, a 68% increase over the same period the previous year. Furthermore, Tesla reported that its first quarter 2022 net income of $3.03 billion above Wall Street projections, while revenues increased by 81% year over year to $18.01 billion. In fact, CLA increased by around 700% in 2022, according to US News. Here, when Tesla went public in 2010, the company had a market valuation of over $800 billion and offered 13.3 million shares at a price of $17 each. By valuation, Tesla is the biggest car maker in the world, with a market valuation of almost $800 billion. The corporation reports $31.05 billion total revenue for 2020, more than sufficient incentive for investors to keep buying. Tesla has developed into the biggest automobile manufacturer in the world, and it currently dominates the market and seems set to stay there. Based in St. Petersburg, Florida, ARK Investment Management LLC, also known as just ARK Invest, is an American investment management company that oversees a number of actively managed exchange-traded funds. Investors looking for long-term development in the public market might find investment alternatives from ARK Invest, which only focuses on disruptive ideas. The company managed $50 billion assets as of February 2021. Kathy Wood, an American investor, founded and oversees ARK Invest. She is regarded as the most underappreciated investor in the industry since, in addition to her strong investing arguments, she has track record to support her remarkably astute assertions. Having said that, find out why ARK Invest revised its model of Tesla's valuation, projecting a peak price of over $20,000 by 2030 and a $4,600 price objective in the best case scenario for Tesla shares in 2026. The most recent version of ARK's open source Tesla model predicts a value per share of $4,600 in 2026, according to the 75th and 25th percentile Monte Carlo results. Respectively, the bullish and bearish scenarios correspond to roughly $5,800 and $2,900 per share. Do you and ARK Invest have the same viewpoints? Please share your thoughts with us by using the comment area below. ARK Invest claims that Tesla's potential robo-taxi business line will be a major driver in 2026, accounting for more than half of projected EBITDA earnings before interest, taxes, depreciation, and amortization, and 60% of predicted value. Although at much lower margins than the robo-taxi revenue, they project that electric vehicles would account for 57% of the company's revenue across the simulation set in 2026. In their 2021 open source Tesla model, ARK stated that they anticipated a share price of $3,000 in 2025. They did, however, alter this position in light of significant modifications, such as estimates of capital efficiency, assumptions and inputs related to autonomous ride hailing, and a one-year advance in the prediction to 2026. The probability that Tesla will achieve completely autonomous driving and the size of the market for autonomous ride hailing at each price point are updated in the ARK Invest model. Their examination of consumers' time values suggests that there will be a greater demand for autonomous ride hailing at higher price points than were initially predicted. Travelers in Western markets, according to research, value their work-related travel miles at about half their hourly salary, and they value their non-work-related travel miles at almost the same amount. ARK projects at 50 cents per mile, priced in line with its predictions. There will be a further long tail of demand in low-income nations, bringing the total addressable market for autonomous ride-hailing to between $11 and $12 trillion. Due to ARK's growing confidence in Tesla's potential for fully autonomous driving, they have revised the model to include the robotaxi industry. Despite their earlier predictions that Tesla will never be able to introduce autonomous ride hailing, they have since changed their minds in response to recent encouraging developments from the company, assuming that it will launch in 2026, 4 years later than Musk had anticipated. Additionally, they predict that in 2024, Tesla will provide autonomous ride-hailing services. Nonetheless, Tesla fails to commercialize robotaxis within the 5-year period in 9 of their model situations. The projected financial results for Tesla are liable to change, depending on if and only if robotaxis become commercially viable within the projected period. Additionally, Tesla's capital efficiency is increased by ARK Invest's upgraded model. When the Vehicle 3 was ramped up in 2017, Tesla's capital investment per incremental unit of capacity was approximately $84,000. By the time the vehicle was released last year, it was approximately $7,700. According to their estimates, Tesla will invest between $6,000 and $8,000 for each additional unit of capacity by 2025. Given its significantly higher capital efficiency than anticipated, it's probably realistic to project that Tesla will invest between $2,000 and $7,000 for each additional unit of capacity by 2026. The key lesson here is that capital is no longer a bottleneck preventing Tesla from growing, even though these improvements suggest that the company may still see margin increases in the future. Rather, Tesla ought to expand at the fastest rate that supply and managerial capacity permit. In order to account for these limitations, the model uses the maximum yearly production increase input to arbitrarily limit Tesla's output growth in any given year. Tesla's business performance is significantly influenced by its capacity for scaling or lack thereof. If Tesla launches robotaxis successfully in 2026, the expected value will be equal to the mean of 1 million simulations. The year that Tesla eventually introduces robotaxis will have a significant impact on those simulations. Tesla launches a vertically integrated human-driven ride-hailing service, but does not establish a robotaxi network in the majority of ARK Invest's lowest price per share scenarios. In other scenarios, Tesla does not launch either service. Although the business hasn't made a formal commitment to start offering human-driven ride-hailing, ARK has already discussed the tactical and strategic benefits of doing so. Crucially, ride-hailing services operated by humans have the potential to generate a healthy, steady income stream prior to Tesla introducing a fully autonomous service. ARK makes the assumption that Tesla's human-driven ride-hailing vehicles will eventually make the switch to the autonomous ride-hailing network in the event that the company introduces a human-driven ride-hailing service and solves for completely autonomous driving. While working toward complete autonomy, Tesla may still introduce a human-driven ride-hailing car if it is unable to establish a robo-taxi service in the allotted 5 years. Conversely, however, in the following 2 to 3 years, Tesla builds a robo-taxi network, according to ARK's significantly higher price per share forecasts. In a published post, ARK Invest said, "We think our Tesla model is methodologically conservative, even though it's tuned to our expectations for 2026. In 2026, we predict that Tesla stock will behave more like that of an established business than a fast-growing one." As part of ARK's conservative modeling approach, the terminal multiple employed in the model is most likely excessive in relation to Tesla's anticipated growth in 2026. Expectations for share prices are therefore quite sensitive to the year of the price objective. The price objective and compound annual rate of return are considerably higher when the model's current assumptions are extended to 2027. If they keep the current model in place until 2030, this effect still exists. However, the model has not been specifically adjusted for that time range, which increases the possibility of mistakes. For instance, by 2030, the form factors of vehicles may differ substantially from those in the current model, and certain unmodeled business opportunities like AI as a service, for instance, may have a greater total financial impact on Tesla. In 2026, ARK projects that Tesla's share price will reach $4,600. According to the most recent model revisions, Tesla's 2026 market value may be between $2,900 and $5,800 per share, depending on the bull and bear scenarios. It is noteworthy that the accuracy of these forecasts and presumptions depends on the state of the economy, which in turn influences stock and market values. These projections are nevertheless worthy of consideration because they were made by a reputable investment management company. Naturally, ARK Invest figures and information are based on their rigorous analysis and in-depth research of Tesla, its stock fluctuations, and its most recent developments. Check out our channel and other videos for more information about Tesla stocks.